What's up guys, this is Chris. Welcome back to my channel. In today's video we're talking all about my portfolio in the month of April 2020, and this is the part 2. Alright, so if you missed part 1 by any chance, where I talk about my top 10 stocks in my portfolio of $155,000, be sure to watch that video first before this one, so I will link it up here. In this video I'm talking about my other stocks that make up the rest of my 1/3 of the portfolio, and these are going to be a lot of great growth stocks. Some of them are swing trades. They're in different areas of the market like ad technology, clean energy, a lot of stocks that I've bought into recently. A lot of great ideas for you and your portfolio. And I would appreciate it, by the way, if you guys gave this video a big thumbs up for the YouTube algorithm. So what are my plans for April 2021 and beyond as far as managing my portfolio? Well, number one, I am going to continue to hold my long-term stocks, and that's going to be stocks like SE, JP Morgan, Realty Income Corporation. These have places in my portfolio for at least the next several years because I continue to see that growth, or they're at an undervalued price. The second thing that I plan to do is start to trim some of those growth stocks that I've added, some of my smaller positions that are more like swing trades. And those are stocks that I added especially during the dips in the month of March and maybe towards the back half of February. And that would just help to de-risk my portfolio, again, because I do use some margin. And I do have a lot of growth stocks. I do want to taper that off, just trying to be prudent with my money. The third thing that I plan to do is try to add some more of those value cyclical type of stocks. I do believe growth stocks are the future as far as looking several years out, but I think some of those value stocks will continue to trend higher because I think inflation is probably going to last for at least a couple of years. And a lot of those reopening stocks just have so much pent-up demand that I think estimates for profitability could actually be low. So if I can get to around a 60-40 percentage, that would be great. I don't think I need a 50-50, especially for my profile of an investor, but I think a better balance could be warranted. And if you're not aware, cyclical stocks typically reference industrials, restaurants, entertainment, travel, companies that do well with a good economy, which typically brings along inflation, higher wages, increased consumer spending, higher employment. All those things are going to be a boost for those companies' business. Now, to cover some of those smaller positions in my portfolio, we have the best of the rest right here, and we have Tiger, Yi, and Tencent Music Group. That is Chinese growth. All right, Tiger is an online Chinese brokerage. They do stock trading in the United States, in Southeast Asia, and Hong Kong. It's a very fast-growing company, 100% revenue growth. We have YI, which also had 100% revenue growth in the past year. They're expecting at least 60% this year as well, and it's a very undervalued online pharmacy company. They also do they have direct-to-consumer, and they also do wholesaling to offline pharmacies, like physical locations. They have patient education, they have telehealth that is growing as part of their business. So it's a very exciting company that's very undervalued. It's only trading at like a 1 PS ratio, price to sales ratio, okay, compared to the healthcare sector, and this is a lot lower than what other companies are trading at. With this high amount of growth, you have to look into this company, in my opinion. And of course, Tencent Music Group, this is like a Spotify. All right, Coupang, I did a video on this. This is a recent IPO. They do e-commerce in Korea. They have crazy fast delivery, right? Dawn delivery. If you order by midnight, you get that item at 7 a.m. It's very impressive. They also have been doing huge growth, again, like triple digits over the past year, and they're expecting very strong growth in the coming years as well. They're also looking at potential expansion into Japan, which is another tangent for them to get a new market and a lot of growth. CCL, a lot of people are familiar with this one, Carnival Cruise Lines. This one has been beaten down like a turd, but it's been coming back. Travel is expected to come back. DC orders for them to not sail is taking longer to get lifted than expected, but I think by the summer people will be going out, and CCL is going to get customers and that income coming back in, because for the past year they've done nothing but bleed money. But we've seen a lot of these travel cyclical type of stocks going back up, and CCL is definitely one of those top companies in them. We have GoCo, which is a healthcare online insurance broker. So they help match insurance plans to seniors. And we know with the baby boomers and everything, a lot of people are retiring. They're going to get consistent business coming in. They have great technology. They like to call themselves a bit of a technology AI company as well. But just looking at the valuation, whether it's a tech company, whether it's a healthcare company, you look at the different valuation metrics like forward PE ratio, price to sales ratio, and again, this is trading way below fair value. And it has around 50% growth over the past year. And the guidance for this coming year is still very great. So definitely one that's undervalued in my opinion. A couple of other stocks here. We have BTNB and IPOF. These are random SPACs created by Peter Thiel, which is a founder of PayPal, and you have Chamath Palihapitiya, which is again a very popular venture capitalist. He's created a lot of different SPACs that have been successful, like Open Stock and IPOE Stock. He was part of MP. So I think that these are worth putting a bit of money into, but again, with these SPACs, especially nowadays, it is a bit of a speculative investment. Perry is a digital ad tech company. They do the ads for Microsoft Bing. Yes, people actually use Microsoft Bing. They don't just use Google. Definitely in some different countries in the world, or at least it doesn't have as prominent a market share. So there is room for that, for Perry to operate. And they do social media ads. They do a bunch of different other ads with connected TV as well. Company that has grown pretty well over the past year, but the main thing is the valuation. You're going to see a lot of these stocks, technology stocks, they're actually kind of like value stocks too, but I didn't lump them in the value category. But some of these stocks, they have great growth, but they're also undervalued. And they do have trends going for it. Like when it comes to those ad companies, right? Like I mentioned earlier with Facebook, a lot of people, running those marketing budgets, they're going to start increasing those because places are starting to open up. People can actually travel. So you can actually advertise for travel now, and entertainment and restaurants, eating out. All of those things are going to see a boost with the reopening. Now to wrap it up, we have the last half of the best of the rest stocks, and GIK, NEO, and Tesla. Those are my EV stock plays, right? GIK especially I have a larger position in. It's a very undervalued EV stock in my opinion. It's only about a $1 billion valuation, but they have real revenue coming in. They have real partnerships with Amazon. DHL, for example, they're getting a lot of different contracts coming their way too, just within the past several months into 2021. Now, their merger is expected in the latter half of April, so I'm very excited for that. Next one on this list is one of those cyclical inflation type of businesses. This is Dow Inc., and they do a lot of plastic manufacturing. So this is a materials company, right? Plastics that are used in different variety of products, like food service, automobile, and other things like that. So as inflation increases, you're going to see that Dow is able to charge a lot higher prices, and that is going to be good for their bottom line. And this company especially is definitely really part of those value stocks, because the past year they had a rough year because at least the first 6 to 9 months, the demand for a lot of those products went way down because manufacturing was pretty much at a standstill. Dow is going to really kick up a lot of profitability, and they've been paying off a lot of debt too, by the way. So that is a very important thing. And so the forward PE ratio on this company is under 20. So that is below market average. Now we have a little bit of, besides EVs, we do have a bit of other green energy, clean energy type of stocks, and that is the iClean Shares ETF. Okay, so that is a basket of different clean energy stocks, and it's not just United States based. I believe they have European and Asian stocks as well in there. And I also have First Solar, which is one of my only solar companies in my portfolio. A lot of these stocks are down 20-30% from their all-time highs when you match it up with the growth, and especially with this administration. I do believe that this Biden administration is going to put out more efforts to increase clean energy infrastructure. We saw that in the draft of the bill that was released. So I think a lot of these companies could receive more business in the future. Now, Corsair and Gravity, these are gaming companies. Corsair does a lot of computer components and peripherals. So think of all the equipment you need for streaming and for gaming. These are trends that are going to continue for the next 5, 10 plus years. So very nice long-term hold if you do want to consider it. It just had great growth over the past year. And to top that off, this company does have a great profit right now. And the forward PE ratio on this company is around 20 or below. So again, that is below market average. Gravity is a company that is very undervalued in my opinion. Really great forward PE, great price to sales ratio. It is a pretty obscure stock, but in Korea, this is a big thing as far as gaming, and really various different countries in Asia, Hong Kong, Taiwan, China, Japan even, they're doing launches there. Southeast Asia, they have a lot of different games with this business. This is down almost 50% from its all-time highs, which is pretty nuts. Last few stocks here, we have Baidu. I just did a video on that in my 3 stocks to buy April 2021 edition, so I won't talk too much about this one either, but it's essentially the Chinese Google. You have search advertising, you have cloud, you have electric vehicles, and you have AI. Second to last one here, you have Apple. This is a $2 trillion company. They have iPad, they have iMac, they have iPhone, they have services, right? All the apps that are sold in the App Store, they get around 30%, I believe, of the cut. That's a lot of money. A lot of people are complaining about it. And there's also a lot of talk that Apple is going to get into the electric vehicle space. They've been developing this project supposedly since 2018. They have several thousand employees working on it. They've had talks supposedly with companies like Hyundai, Kia, a lot of different Asian car manufacturers to leverage their manufacturing capabilities, and Apple will provide the technology. That remains to be seen, but if they do get into that space, especially with the valuations that electric vehicle stocks tend to carry, then this could be a really big growth driver as far as Apple's business and for the stock price, right? And the last stock on this list is going to be Fuse stock. Okay, this is a SPAC that is merging with MoneyLion. MoneyLion is a pretty popular finance app. They do things like investing in stocks, cryptocurrency, consumer loans, credit building loans, and payday loans, things like that. And at $10 per share, it's pretty much a very low risk SPAC at this point. It had in the past year triple digit growth, and the expectations for the coming years is really, really solid. So I'm not really seeing why the stock is trading where it is, to be honest. I think that with this growth, it should be trading much higher, but I guess some people do have some skepticism of whether or not these numbers can come to fruition, but there's no mistaking that historical data that they've been growing like crazy over the past several years. So this is one that I'm going to stick to, even though I'm currently down on this position. Oh, all right, guys, that was a real mouthful, and that was a lot of different stocks, but I'm glad if you stick through to the end of this video. I appreciate it, and hope you guys got a lot of value out of it, right? So again, to recap, my top 10 stocks are going to be SE, JP Morgan, IPOE, otherwise known as SoFi, MP Materials, Facebook, Nvidia, Salesforce, Realty Income Corporation, Golden Nugget Online Gaming, and Boeing Corporation, as well as the host of other smaller positions I have in my portfolio. So let me know in the comments down below what stocks you own, what stocks you're looking forward to buying. Hope you guys enjoyed this video, and stay tuned for more. Until next time, my friends, stay well and invest responsibly.